Hey everyone, welcome back to Corporate Decoder. Today we're diving into a new report, and let me tell you, this one has more twists than a pretzel factory. We'll see if this company's finances are as strong as they claim or just smoke and mirrors. Want to discuss this more with other finance nerds? Join our Discord community. The link is in the description below. Today we are breaking down Denali Therapeutics' latest quarterly report, filed from March 31, 2025. In short, Denali, a biopharmaceutical company focused on brain diseases, is still burning cash, even after some recent funding. Let's see where their money is going and if there are any red flags. Right off the bat, this is a Form 10Q, which means it's a quarterly report, giving us a snapshot of the company's performance over the last 3 months. Let's get into the financial statements, looking at the condensed consolidated statements of operations. Denali reported a net loss of $133 million. That's a big number. And it's even larger than the $101.18 million loss they reported for the same period last year. So their losses are growing. To make matters worse, their net loss per share, which is a measure of how much money they lost for each share of stock, also increased. This quarter, the loss was 0.78 per share compared to 0.78 pence per share, compared to 0.68 per share last year. This means shareholders are effectively owning a larger portion of a shrinking pie. Now let's talk about cash flow. The report indicates net cash used in operating activities was $131.5 million. This means that their core business activities are draining, not generating cash. The report details that they are purchasing and selling securities at similar rates. Denali used $137.9 million on security purchases and got back $161.8 million from sales and maturities of marketable securities. This looks like they're managing their investments to maintain liquidity, not necessarily to make huge returns. Let's move on to the liabilities and equity section. We'll see the balance of the company's debts and assets. I'll look at the value of their common stock, which is valued at $1.78 million. But more notably, their accumulated deficit is $1.67 billion. This shows that Denali has a long way to go to generate income. This tells me that the business activities has been unprofitable so far and the company is far from profitability. Here's an area to look at: the stock options. The grants they had amount to about $25 would be worth knowing, since this is the amount of compensation paid to the employees in stocks. This policy basically spells out how the company treats cash and short-term investments, saying that they are very careful about the securities they invest in. Now let's look at the use of estimates section, where Denali notes that their financial statements are based on estimates, judgments, and assumptions. It's important to understand that these numbers aren't set in stone and could change. Let's talk about risk. Denali highlights several uncertainties, such as the need for additional funding, potential clinical trial failures, and the need to obtain regulatory approvals. If Denali can't commercialize or partner any of its product candidates, it will be unable to generate product revenue or achieve profitability. They also acknowledge the broad market risks from bank failures, war, inflation, and other global uncertainties. Moving on to commitments, they have 2 key leases, their headquarters and a clinical manufacturing site. Let's look at non-cash equity received. For example, the total consideration received of $15 million in non-cash equity. Denali is working with major players like Biogen and Sanofi. These agreements can bring in cash, but they also involve giving up some control. Worth noting is that Biogen terminated its license on one of their programs. Keep this in mind, since they might face challenges from their partners regarding research programs. A major announcement includes the side letter with Sanofi, which also terminated some future royalty payments related to the CNS product program. Now let's take a step back and look at the big picture. The numbers paint a picture of a company investing heavily in research and development, as they should be, but still far from turning a profit. While the partnerships are a positive sign, the terminations show how quickly things can change in this industry. Denali is in a tough spot. They have to burn money to make money, but they must be very careful in how they manage expenses to prove they are a good investment. There are clear strengths. They have collaboration, some potential products, and a focus on challenging diseases. However, they're burning a lot of cash, and the road to profitability is uncertain. What is also unclear is their cost control. The numbers are rising at concerning rates, and shareholders need to watch out that this trend does not continue. Is Denali a good bet? It's high risk, high reward. If their research pays off, they could be huge. However, if they fail, investors might lose everything. Alright, that's our breakdown of Denali's latest filing. What do you think? Is Denali on the right track? Drop your thoughts in the comments. If this analysis was valuable, hit that like button and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.